Guinness Nigeria. Okay, rather an interesting headline. The headline reads thus: Guinness Nigeria swing from a 54 billion loss back up to a 51 billion naira profit. So guys, welcome to today's we are going to, just like we normally do, we are going to review the results of Guinness Nigeria, their 2025 full year results. So normally, let's look at the dashboard. After the dashboard, we dive into the story behind the number, because the most important thing is for you to understand the context. Context always matters. Once you get the context, then you can read up every other thing. This is our S page. So you follow up us on X to go and download these graphics and stuff like that, and summary of the analysis, while we also update you with some of the things that are not in the exposed in this video. That's why we of course make the video to explain more what really happened. So as it's loading up, so you hold on a sec and you look it up. Okay, so get the graphics is loading up. So some changes happened with Guinness Nigeria. Because some changes happened. Number one is, it is a story of the balance sheets recovery. That is the story of Guinness. It is a story of balance sheet recovery. So let's look at, hold on a sec. Okay, sorry about that. We are back. So this is the snapshot of the income statement. This is a snapshot of the balance sheet. So you see that revenue grew over 65%. Gross profit, everything is looking up. Everything is looking up from because of the recovery, which we are going to tell you the story. So if you look at this, everything is actually looking up. Then let's now dive to the details of the income statement. So if you look at the income statement, if you dive through the number, alright, let's get the income statement and look at what happened. Okay, so this is the income statement. You see that the full year 2025, the business recorded more profits of over 65%. You see all the margins are actually looking up. Then let's go down to the bottom line. Look at the devil in the detail is this FX. This FX lock is what tracked this whole business, and it came as a result of the US dollar loan they had. So immediately CBN floated the exchange rate, naira devalued. So that's, just imagine owing 5 naira and all 5 naira triples or quadruples. So that was the story. It's dragged on them, and also they have some FS obligations. They import some stuff that's raw material wise for production. So this is what dragged the whole business. Now that is why 2024, it started from 2023. So because we looked the number, we looked for over 5 years. So relatively 2021, 2020, the business was a smooth business doing its thing until the devaluation came. So 23, 24, the business took a hit. But 25 is the recovery storyline. So that is why if you see 24, you see that it closed on a negative and the net income side. But now it has swung back to profit. So that is it about the income statement. So and then look at the balance sheet, which was hit pretty hard. Pretty hard. So this is the balance sheet. So of course the assets grew. So the total asset is over 273 billion. The liability declined and the total equity added up. So the total equity added up. Now, this is what the balance sheet looks like, but let's look at the number backing up the balance sheet. That will really give us a hint. There are these are the balance sheets. This is the balance sheet. Of course, assets grew from the revenue side of things. The total liability side of things also added up, and the total equity also showing the very well back up to 18 billion. But this is the cash. Here is the cash. So if you look at the ratio side, the margins are doing pretty well. For the gross margin, the margins are doing well, not just because of the interest sake. Remember they increased price and they sold more volumes. So the margins are doing very well from the balance sheet side of things. But where it starts looking cracky, if you check the interest coverage, it is below the benchmark. Why? Because of the exposure they had. That FS drag is lingering. Then the balance sheets, if you overlay the balance sheet, just 24 and 25, it is pretty bad. But what we did is we went back to see where the business was, because this kind of shock is called an outlier in the system. A business has been operating for years. All of a sudden, something happened macro-wise, and 2 years there was a drag. So sometimes what you need to do, you ignore that and go back to when the business was stable. So that's why if you judge from all these metrics, you say that this business is bad, that the balance sheet is bad, but you have to know where they are coming from. So that is why we focus more on the 25 ratio and see that it is on a recovery stage. That's why you're seeing return on assets at this price. This is in terms of where they are coming from. So the real story continues from 26 we are in now to see. So it is a recovery side. So if you want to get a sense of what the business looked like, which is what we did, go back to 21, 22 balance sheet and see the macro impact, how the business looked like. Then these are some of the things that actually happened over time. Number one is the volume and the pricing. They had volume and pricing power. Diageo sold one of the biggest shares, sold over 50-something% stake to Tolaram. So there was a takeover or turnaround. So there was this one big holder sold to another. So Tolaram is now in charge. They now repaid that loan that dragged. So that loan has been repaid. Then the companies also, interestingly to know that the companies where they 98% of it is not segmented. Nothing like Nats is giving us money or beer is giving us money. They did not segment. They acknowledge that their revenue is not fully. There is no side of their portfolio has over 10% of their revenue. So it's a distributed revenue, number one. And number two is that the bulk of their money is coming from Nigeria. Nigeria is their market. Imagine over 98% coming from Nigeria. Just the 2% might be the export they are talking about. Now, another thing to know is that the former owners, kind of majority owners, they did not totally leave. They still have some royalties that is being paid to them in tune of 8 billion naira annually. Now, from the level workforce side of things, they did some restructuring. They reduced their staff size from 796 to over 752. So they cut down. And they also end, the government do this promissory notes for if you can export and earn effort. There is this promissory note the government gives. So it is called the EEG, which means Export Expansion Grant. So they made over, or they have a claim of over 1.35 billion because of the small exports they are doing, which is a positive on the side of things. Then, the one thing that made us to raise an eyebrow too is that if you go through the income statement, it is surprised to know that there is no litigation, there is no claim. For a business as big as this, the directors are talking that on a possible litigation or claim. So, and we are like, the business as this as big, you don't have any litigation with the custom, you don't have any litigation with the NAFDAC guys, you don't have any litigation with the IFRS, now changed to INROC, right? Nigeria Revenue. Yeah. So it is something like raising an eyebrow stock of thing. Then another good thing is if you overlay their balance sheet, that is why if you look at their income statement, if you look at their liability side, you see that they have short-term liability. But for the very first time in a while, they are able to secure a long-term debt from bank. Now, their export, another good thing is that their FX exposure now is pretty stable now, relatively manageable as it stands now. And there is an interesting forecast they made, just so you know, these businesses they make for. So, they pay benefits now, compensation and retirement and stuff like that to their employees. So they need to use their annual calculation to just calculate what inflation looks like. So they made a provision that an assumption that inflation will be at 18% and that overlaying it with a discount, they are seeing a discount rate of 17.5% in the market. So it's interesting to know that. And now, another thing that is worrisome about their play is that they now have some cash, but they deposited that cash with a banks that have, alright before, you know, these banks have rating A+, B+, B stable, and also. So bulk of the bulk of their cash, which is just in tune of 5.7 million, is sitting in a bank that have B stable, and just the remaining percent is sitting, which is 1.7 billion, sitting with the bank that has A stable rating. So what will possibly make you put a bulk of your savings with a bank that has better rating? Maybe because the interest will be more appealing. I think they are trying to gain as much as they are in their recovery story. Then from the balance sheet side of things, so you can really say, due to this transition, remember new management, even if there's 7 out of 9 board members, they are splitting you, starting from the MD, the finance director, and the vice chair. So the company will change, new licensing, new banking, new supply chain and stuff like that. You know, pretty right, new something. So when you overlay this, and also importantly, they change their reporting format too. The company changed their reporting format. Before they used to report 18 months. Now they have dialed it back to 12 months reporting now. So looking at all this, what you can clearly say from the business side of things is that the balance sheet is clearly on a recovery. It moved from a shock posture now into a recovery mode. It's not pretty stable at the moment, but it's a recovery play. So that is it about Guinness. Like, share, subscribe, comment, go on X and download the reader so you can make our X page, of course, so you can make informed investment decisions. See you on the next one.